All right, so the presumption here is that you have already listened to the Chapter 6 lecture. So if you have not yet done that, please go back and do that, and then you can come back and work your way through this presentation, and hopefully it'll make some more sense to you. All right, exercise 6.6. So Wapaka Company, I think they intentionally use names that I can't pronounce. So we'll call it Wapaka. I have no idea if that's right. Wapaka Company establishes $350 petty cash fund on September 9th. On the 30th, the fund shows $104 in cash along with receipts for the following expenditures. So what they're asking us to do is prepare the journal entry to establish the fund on September 9th. So let's see, on September 9th, they established a $350 petty cash fund. So all we have to do to establish a petty cash fund is debit petty cash and credit cash. So then they want us to prepare the journal entry to reimburse the fund on September 30th. So here's what that looks like. So the cash we started with was 304. There's 104 left at the end of the period. So 350 minus 104 is the reduction in cash, 246. And then we need to record the activity to their appropriate accounts. So they say we have transportation in charges of $40. Well, that gets recorded to merchandise inventory. We had postage expense of $123, miscellaneous expenses of $80. So we have a total expense of $243. And then it says the petty cashier could not account for the $3 shortage in the cash fund. So that's just going to go to cash over short. Okay. So that's the journal entry to reimburse the fund. So you've started with 350, you spent some money. And so in order to reimburse it to get it back to 350, we have 104 left in the petty cash fund, they tell us. So we just need another 246. So then if we prepare the journal entry on October 1st to increase the fund to 400, we're at 350. We need additional $50 to be at 400. So we're going to debit petty cash and we're going to credit cash for 50. Okay. All right, same problem, different numbers. Why don't you take a stab at it? And then you know the drill, resume the recording, and we can go through the answers. All right, prepare the journal entry to establish the fund. Debit petty cash, 320, credit cash, 320. Then prepare the journal entry to reimburse the fund on September 30th. So we need to record the activity that's happened from the fund, right? So they tell us we have $77 left. So our cash is reducing by $243 because we spent $55 on merchandise, $66 on postage, $120 on miscellaneous expenses, and we had a $2 shortfall. So that's going to go to cash over in short. Okay. Then prepare the journal entry on October 1st to increase the fund to 450. Petty cash, we had 320. We want to increase it to 450. We need a debit of 130, and we need a credit of 130 to cash. Okay. All right, exercise 6. So Palmona Company establishes a $200 petty cash fund on January 1st. On the 8th, it shows $38 in cash along with receipts for the following. They use a perpetual inventory system in accounting for merchandise inventory. Prepare the journal entry to establish the fund on the 1st. So we're going to debit petty cash for 200 and credit cash for 200. Then the journal entry to reimburse the fund on January 8th. We've got $200 of cash that we started with, less 38 that's left. So our cash decreased by 162 because we had postage expense of 74, merchandise inventory of 29, transportation and costs are part of inventory, don't forget. Delivery expense of 16, miscellaneous expense of 43. Total expenses of 162. Then let's see, prepare the journal entry on January 8th to both reimburse the fund and increase the fund to 450. So there's our same entry we just went through. To reimburse the fund to 450, we just need an additional $250, right? We started with 200. They want it to be 450. So the difference between 450 and 200 is 250. Debit petty cash, credit cash. All right, same problem, different numbers. Why don't you give it a try? And then you know the drill. All right, journal entry to establish the fund. Debit petty cash 170, credit cash 170. The entry to reimburse the fund on January 8th and record all the expenses that happened. Cash 170 we started with. They tell us there's 73 left. That's $97 credit to cash. Debit to postage expense for 41, debit to merchandise inventory for 12, debit to delivery expense for 14, and debit to miscellaneous expenses for 30. Okay. Then they want us to increase the fund. So there's the same entry. They want us to increase the fund to 350. We are currently at 170, so the difference would be 180. Debit petty cash, credit cash. All right, exercise 610. All right, so in this example, they give us a bunch of information and they want us to prepare the bank reconciliation. So first we need our bank balances and our book balances, right? So bank balance, they tell us is 10,555. So we'll bring that down. Book balance, they tell us is 11,589. So we'll bring that down. And then we have to start listing our reconciling items on the appropriate side. So on the bank side, we need to add deposits in transit and subtract outstanding checks. So, and on the book side, we need to add anything the bank's showing, I guess, is a collection that we don't yet have recorded. And then we need to, interest maybe would be an example of that. And then we need to reduce our, for any like check printing fees or NSF fees or things like that. All right, so on the bank side, they tell us we have deposits in transit, or outstanding checks, sorry, of $1,829. On the book side, they tell us we have a $16 bank service charge. And then, let's see, check 919, listed with the canceled checks, was incorrectly drawn for $467. Delgado mistakenly recorded it as a debit to utilities expense and a credit to cash in the amount of $476. So on the book side, we recorded too much expense and a reduction, too great of a reduction in cash, so we need to add $9 back. Then on June 30th, the cash receipts of $2,856 were placed in the bank's night depository after banking hours. That's deposit in transit. This 2856 belongs on the bank side. So then if we do our math, we have an adjusted bank balance of 11,582. Do our math on our book side, we hopefully have an adjusted book balance of 11,582. Okay. All right, so this is the same problem, just different numbers. Why don't you take a few minutes and see if you can't reconcile this bank statement? And then when you think you're through, you can resume the recording and we can go through the answers. All right, so bank reconciliation, here we go. Book balance, they tell us is 12,398. That's right here. Bank balance, they tell us is 11,521. That's right here. We're going to add and deduct anything that we need to on both sides. So they tell us outstanding checks as of June 30th were 1,620. So that gets deducted from the bank side because we've already recorded them on the book side, right? Then we have a bank statement that includes a $35 debit memorandum for bank services. So when bank service charges need to be deducted from the book balance, they're already deducted from the bank balance. Then we got that check 919 that was incorrectly drawn. So we need to add $9 to our book side. Cash receipts that were placed in the bank's night depository after banking hours. So let's add $2,471 of deposits in transit. Then if we add everything up, We've got an adjusted bank balance of $12,372, and we have an adjusted book balance of $12,372. So hopefully you did well on that one. Exercise 611. All right, prepare the adjusting entries that Delgado must record as a result of preparing the bank reconciliation. So first, the utility expense error. We need to reduce our cash or increase our cash by 9 and reduce our utility expense. We do that with a debit to cash and a credit to utility expense. On June 30th, we need to record our bank service charges. In this case, they're using miscellaneous expense, debit, and reduce our cash. All right, same problem, different numbers. Why don't you take a try at it and then resume the recording and we can go through it. All right, so we had an error on check 919. We recorded too much utility expense and we reduced our cash by too much. So we need to increase cash, $9. Decrease utility expense, $9. Then we need to record our bank service charge. That's going to be an increase to miscellaneous expense and a decrease to cash for $35. All right, exercise 612. Right company deposits all the cash receipts on the day they're received. Close of business, the cash account shows a $27,500 debit balance. Bank balance shows $25,800. So then they give us all of the details for the bank rec and items A through E, and they want us to prepare the reconciliation. So bank balance, book balance. We're going to add and subtract some different things from both sides, right? So we'll set up our rec. So our book balance, they tell us, is $27,500. That comes from right here. Our bank balance, they tell us, is $25,800. That comes from right here. The May 31st statement lists $100 in charges that the company's not yet recorded on their books, so we need to reduce our book side by the $100 charge. In letter B, we have outstanding checks of $5,600. Those aren't yet clearing the bank, so they're not reported in the bank balance. We need to reduce the bank balance by that amount. May 31st cash receipts of $6,200 were placed in the bank's night depository after banking hours, but were not yet recorded on the statement, so that's a deposit in transit on the bank side. In reviewing the bank statement, $400 check written to Smith Company was mistakenly drawn against Wright's account. So there's a bank error. We need to add back $400. And the bank statement showed a $600 NSF from a company. So then if we add up all of our changes, we've got a total of $26,800 bank balance and a $26,800 book balance. We are in balance. All right, so same thing here. Why don't you take a try at it and then resume the recording when you're ready to go through it. All right, so let's set up our rec. There's all our categories. So our book balance is $30,100. They tell us that up here. Our bank balance is $28,400. They tell us that up here. Letter A says the bank statement has $230 in service charges. So we need to reduce those from our book side. Outstanding checks were $6,900. That needs to be reduced from our bank side. May cash receipts of $7,500 were placed in the depository after hours. So we need to add deposits in transit to our bank side. In letter D, there was a $530 check written by Smith Company that was mistakenly drawn against this account and shouldn't have been. So the bank needs to give us that money back. So the bank error, we need to add $530. And then there's an NSF from a customer, and we got a fee for that. So we need to reduce our book balance by $340. So add them all up. And we should balance, and we do. Okay. All right, exercise 613. So Bargains Company reported the following year-end information. Using the above, calculated days sales uncollected at the end of 17. So accounts receivable divided by net sales will times 365 will tell you the number of days sales uncollected. So we have a balance in 17 of 65,000 in our accounts receivable divided by our sales of 730,000 times 365 is 32.5 days. In B, they want us to do the same thing, but for the year 18. So accounts receivable divided by net sales times 365. $123,000 of accounts receivable divided by 1,095,000 in sales times 365 is 41.0 days. All right, why don't you guys take a try at it? Calculate both 17 and 18. And then when you're finished, resume the recording and we'll go through them. All right, so again, accounts receivable divided by net sales times 365. So for the 2017 year, we have $61,000 of accounts receivable divided by $669,000 of net sales times 365 is 33.3 days. And then in 18, same idea, right? This time we're going to take our sales or accounts receivable of 89,000 divided by our sales of 749,000 times 365, 43.4 days. All right, guys, so that's it for chapter 6. So this was a rather shorter one, but hopefully it gave you enough information to feel comfortable to get through the homework. As always, if you have any questions, please don't hesitate to reach out. Take care.